In this video, I want to give you an introduction to a very broad topic called high-risk processing. Now, when we talk about high-risk processing, what businesses are we talking about? Well, there are merchant accounts out there where there is simply a very high risk of a chargeback. Let me give you a couple of examples of this. Imagine if I owned a travel agency and I sold you on a cruise that you were going to take next year, and I asked for a payment of $4,000 up front in order for you to take that cruise next year. Now, I've taken a $4,000 payment, but I'm not providing that service for a year. What if I took 100 of those types of payments, right, at $4,000 a piece? Well, that's $400,000 that I've accepted in payments, but I haven't actually given anybody any value yet. What if my travel agency goes out of business and I lose all of that money or I embezzle that money? What happens to the payment processor? Well, the payment processor that processed those $400,000 in transactions, what's going to happen is all those customers that made those payments, they're going to go to their bank that gave them their card and say, hey, I didn't get my cruise. And the bank is going to say, hey, they're going to go to the processor and say, give us our $400,000 back. The processor is going to try to collect that money from the merchant, but if the merchant's out of business, well, that's the end of that. They're going to go ahead and have to pay that $400,000. So I bring this up because high-risk merchants are where there's generally a real financial risk for the processor, who is in a lot of ways really loaning money to the company, to the merchant, in exchange for some kind of future deliverable. And then if there's a financial loss, we have a problem. Now, this isn't just with travel agencies. This can be with many different e-commerce merchants, actually, where they're accepting money before they ship something out. And so there's maybe an issue there where they get overextended, they go out of business, and they just happen to have a lot of money out there. But there's also risk that's reputational risk. This is where we get into things like CBD shops, vape stores, adult entertainment, things of that nature, where certain banks just don't want to be involved in that type of business, and therefore they refuse to do payment processing for those types of companies, making it hard for them to find a payment processor that they can work with. What's really interesting about these high-risk merchants is that at the time of this recording, the method of processing is still rudimentary. In other words, nobody has really put a lot of time and effort into building fantastic software solutions for these high-risk merchants that has payment processing built into it. So even these e-commerce merchants, a lot of times, Shopify won't work with them. Most of the big platforms like Stripe, they won't work with these high-risk merchants. So they're stuck using a very basic gateway. So it's a very rudimentary processing, which actually can work out really well for those of you that sell payment processing solutions, because generally, you don't have that issue of, well, they're already integrated with XYZ, so they can't process with me. They're generally open to that conversation. And that really brings us to one of the key points about high-risk merchants, is that their main need is for consistent payment processing. So all the businesses we've talked about so far in this little playlist or mini-series have been, card not present service providers, mom and pop shops, e-commerce stores, where they kind of take payment processing for granted. It's more of a commodity to them. So it's like in their mind, well, of course they'll be able to accept payments. There's maybe what's the cost going to be, but they know they're going to be able to accept payments. With a high-risk merchant, they don't know that. And many times they will get shut down because they'll work with one processor who has a bank that's working with them. And then all of a sudden, out of nowhere, that bank will say, well, we're no longer processing for gun shops anymore. And all of a sudden, the gun shop gets a call and says, hey, next month, we can't process your payments anymore. And so they've got to scramble and try to find a processor that's willing to work with a gun shop. So these high-risk merchant types and medium-risk merchant types, for them, payment processing and being able to accept card payments is not a given. So their primary concern is stability. They want to know for sure you're going to be able to process payments for them and get them their money into their account. Okay? Now, because of the nature of the risk of these accounts, the pricing is generally a lot higher. It's not uncommon to see a high-risk account paying 5, 6, 7, 8% or more in order to accept payments. So out of a $100 transaction, they might pay $8 in fees to the processor to be able to take those payments. And the reason is because you need a lot of profitability in the portfolio to offset the real financial risk. Okay? A couple of other things to keep in mind. Many times these merchants will have a reserve or a hold to where the processor is going to say, hey, we want $50,000 in an escrow account that we hold on to protect us against financial losses, and or we want to keep 10% of the money you process in addition to the fees in a reserve account against these financial losses. right? So these are things we have to keep in mind. The other thing I want to mention here for those of you selling high risk, don't expect to get the same percentage split on residual that you would get with a low risk account, because the processor does need to make more money on these accounts on average to offset those big losses they're going to experience when one of these deals goes belly up and they lose $500,000 or $100,000. They need to actually make some money on this portfolio. So those are all considerations when we're talking about high-risk merchant accounts. Now, one of the big considerations though is it a high-risk account and what kind of pricing are they on? To understand that, make sure to work with our sponsor, getisoamp.com, getisoamp.com, where you can upload a high-risk processing statement and either instantly or within a few minutes get an analysis back that shows you what that merchant is paying so you can talk to them about their pricing. Be aware though, if you get a statement back and you're like, wow, they're at 7%, 8%, take a look at that statement more closely. You're probably going to see a lot of chargebacks, and the odds are they're probably going to be a high-risk merchant account. So don't go in there and say, well, I can sell you at 3%. First, talk to your processor. Number one, make sure they can even support that type of business and process for them. But also, I would say, make sure that that business type, not only is it supported, but also what kind of pricing do you need to do to justify the risk, the financial risk that your processor would be taking. One last resource I want to share with you at the end of this video. I have another company I work with called Maverick Payment Processing. They specialize in high risk. If you want to learn more about that, head over to ccsalespro.com/high risk, just all lowercase, all one word, ccsalespro.com/high risk. There's a free download there where you can see all the different high risk business types. Take it with you in the field. It's a great guide to have with you to see what the concerns are going to be for that particular business type. So that'll be a great way for you to follow up with this video to learn more about that. My name is James Shepard. I wish you great success in building a high-risk portfolio.